Welcome to today's What Moved the Market show. I'm your host Prem. It's Wednesday, February 4th, 2026, and here is everything you need to know as the markets close for today. Let's kick off with the day's market performance. After yesterday's spectacular 2.5% rally triggered by the India-US trade deal euphoria, profit-taking took center stage today. The Nifty 50 finished the day at 25,776, essentially flat with a marginal gain of just 19 basis points. The Sensex also reflected this cautious sentiment, trimming some of yesterday's gains, though it managed to stay marginally positive. The BankNifty faced similar headwinds, with traders cashing in on the substantial rally we witnessed on Tuesday. Overall, market sentiment remained tempered as investors took stock after the powerful Rupee move and shifted their focus towards managing positions ahead of the RBI Monetary Policy Committee meeting outcome that is due on Friday. The Rupee showed resilience, trading around 90.43 against the US dollar, staying relatively stable as portfolio flows remained monitored by participants. What's important here is that the Rupee held its ground despite global currency movements, indicating steady demand for Indian assets even as profit booking unfolded. Now let's look at what moved individual stocks. The big story of the day was a sharp sell-off in technology shares. Infosys led the declines among the top 50 names, dropping over 7.5% on profit-taking concerns. Tata Consultancy Services or TCS followed closely with a decline of nearly 7%, while HCL Technologies, Tech Mahindra, and Wipro all shed between 4 to 5% each. The entire Nifty IT index fell nearly 6% today, giving back a significant chunk of its gains. This was primarily driven by concerns about the US technology sector slowdown and some margin pressure from a weaker dollar scenario. On the flip side, some sectors delivered strong performance. Trent Limited emerged as the top gainer with a gain of over 4%, while Oil and Natural Gas Corporation climbed nearly 4% riding on strength in crude oil prices. Maruti Suzuki added 2.5%, and Max Healthcare picked up over 2%. The broader market theme was defensive, with selective buying in value pockets and energy-related names. On the IPO front, Fractal Analytics, the artificial intelligence-focused firm, has set its IPO price band at 857 to 900 rupees per share, targeting a valuation of around 14,450 crores. The anchor book build is scheduled for tomorrow, with public subscription opening from February 9th through 11th. This is being positioned as India's first pure-play listed AI company, marking an interesting entry point in the primary market amid current market conditions. Looking at key technical levels, Nifty 50 tested its important support zone around 25,650 mark, but held firm, which is a positive sign for bulls. BankNifty also consolidated well above the 60,000 psychological level despite profit-taking, indicating that long-term support remains intact. For traders, 25,450 on Nifty and 59,500 on BankNifty are now key support zones to watch closely for tomorrow's session. From a sector standpoint, it was a mixed picture. While IT stocks witnessed a correction, energy and infrastructure names outperformed. FMCG, pharma and utilities showed relative strength. The broad market participation remained healthy, with nearly 1,700 advancing stocks against 900 declining names. This suggests that while the frontline indices took a breather, underlying market breadth remained constructive, which augurs well for the next leg of the rally. On the macro front, the RBI Monetary Policy Committee is in session today through February 6th, with the policy decision and rate announcement expected on Friday afternoon. Markets are keenly watching whether the central bank will maintain its current stance or signal any shifts, given the inflation data that has remained below target for 11 consecutive months. The consensus view is that the RBI might hold rates steady at the current level of 5.25%, though forward guidance will be crucial for market direction. Additionally, the Union Budget 2026 announcements have already set the stage for fiscal measures that could support growth, giving the RBI some flexibility in policy making. On the commodity front, gold and silver extended their recent gains on safe haven demand. MCX gold for February delivery closed at approximately 1,53,930 rupees per 10 grams, maintaining its upward momentum. Silver surged to 2,80,000 rupees per kilogram, recovering strongly from recent lows and showcasing bullion's appeal amid geopolitical tensions between the US and Iran. These price levels represent significant strength in precious metals. Crude oil continued its march higher, trading around 5,770 to 5,800 rupees per barrel in local terms. The rally in oil is being supported by supply concerns and renewed geopolitical tensions that have supporters cautious about energy supply disruptions. Speaking of geopolitics, the escalating tensions between the United States and Iran have become a key risk factor for global markets. This uncertainty is providing an underlying bid to safe haven assets like gold, and is also lending some support to crude oil prices. While this geopolitical backdrop adds volatility, the India-US trade deal from yesterday is seen as a structural positive that should provide resilience to Indian equities over the medium term. The rupee stability today, despite global chatter, suggests that investors remain committed to the India narrative. Looking ahead to tomorrow, the Nifty 50 needs to sustain above the 25,650 support zone to maintain its positive bias. If it manages to break above 26,000, we could see a fresh leg higher towards 26,350. However, if we slip below 25,450, traders should be cautious as it could signal deeper profit taking. BankNifty's immediate battle is around the 60,000 level. A sustained move above 60,500 could open the doors to 61,000 territory. Support for BankNifty sits at 59,700, and if that breaks 59,000, we could see a correction towards 59,000 levels or lower. The broader market remains in an uptrend, though consolidation and volatility are expected as participants digest the policy decision coming on Friday and assess the impact of the India-US trade deal on sector-specific valuations. Here's your actionable insight for today. Given the profit booking in IT and the strength in energy and defensive stocks, selective buying in quality names at these levels, especially in non-IT sectors like banking, automobiles and infrastructure, presents a good risk-reward opportunity for medium-term investors. Short-term traders should be cautious and avoid aggressive positions until we get clarity from the RBI policy on Friday. Watch the crude oil and gold prices closely as they'll act as key sentiment drivers tomorrow. That wraps up today's market wrap. Thank you for tuning in to What Moved the Market. We'd love to hear from you. Send in your questions, market observations, or stock picks at our listener email, and we'll address them in tomorrow's show. Remember to stay tuned for tomorrow morning's market wrap, where we'll start the day right with pre-market analysis and what to expect from global markets. Until then, keep tracking those key levels, stay safe, and happy investing. I'm Prem, and we'll see you again at market close tomorrow. Thank you and good evening.